and that's why not a tie. And then the markets are doing okay. The US markets had a good move. The rally was driven by gains in technology stocks, while bond yields and the dollar fell after data showed that the US jobless claims surged more than expected last week. This jump, no, let's stick with the markets first. This jump, and we'll come to the yields as well. But this jump in the jobless claims was surging to the highest since October 2021, shows that the labor market is starting to show signs of cooling, which is a great sign. Now, that delivered a boost to the tech sector. And as you can see here, the NASDAQ was the principal gainer, up about 1%, with the Dow and the S&P about 0.5%. Now, let's move to the next plate. There was uh, cool. So yesterday, you remember the 10-year yield was at 3.79. Now, this keeps on moving, but as last count as of 7:30 a.m., at about 6-7 basis points lower. So that was a good thing. The dollar index steady at 103. VIX, no big changes there. So all is well. The SGX Nifty should come up on your screen next. And after the downtick that we saw yesterday, it'll be pertinent to see what's showing today. About 0.19%, 18,756 is what the SGX is suggesting. Therefore, what's the trade setup for the day? To my mind, the crude plunge and the stronger global markets may galvanize the weak Indian markets of yesterday. Bank Nifty is at a very crucial support position at about 43,700, and despite the Nifty looking okay, very likely that the support of Bank Nifty might get breached as well if the Kotak Bank stock starts off materially lower. And I'll come to that in a moment. But my point being that I largely think, looking at the screen, looking at what experts are telling me, looking at some quant indicators, the risk reward is not in favor of leverage longs currently. Cash market stocks, stock specific moves always happen. Even in a market plunging about 1,000 points, there are stocks which do well. So individual stories will continue to do well, but leverage longs, maybe not so. And why do I say this? Despite the market's flavor looking reasonably okay in trade today, is one, of course, because of the move yesterday that happened, viewers. And you would remember that we had a substantial downtick in trade yesterday. Actually, if I can just skip a few plates and come to some liquid losers of trade yesterday, it will show you what I'm trying to say. Look at this. Now, yesterday, Tata Communications was up about a couple of percentage points at the start of the trading day, and then ended about 2.2 percentage points lower, with volumes nearly 3.7 times the weekly average. Similarly, for HPCL, BPCL, IOC, sharp downticks yesterday on fairly high volumes, 1.63 times the weekly averages. Tech Mahindra, and showed what's happening in IT yesterday, 2.2 percentage points lower at nearly twice the weekly average volumes. IEX was down 8% on 5x the weekly average volume. So a lot of liquid stocks had sharp downticks yesterday, and a lot of these were actually trading at the day's highs. Like, for example, Tata Communication, viewers, yesterday hit its 52-week highs or life highs. Titan hit 52-week highs and then came off and ended in the red. It happened to a bunch of stocks. In fact, if I'm not wrong, nearly 23 stocks in the FNO universe were trading very well at a point of time and then just kind of completely came off. So the sentiment isn't the strongest, but maybe it was a weekly expiry late move, and maybe we recover a little bit of lost ground today. Now, I think a lot of it would depend on what the Bank Nifty does, and what the Bank Nifty does could well depend on what Kotak Bank does. And therefore, we come to the next plate. So the Bank Nifty supports you've seen. Now, the reason why the Bank Nifty becomes important is because yesterday too, the stock that was weighing in heavily on both the Nifty and the Bank Nifty was Kotak Bank. It corrected quite a bit yesterday. The reason is now known. Canada Pension Plan Investment Board will offer about 3.3 crore shares, representing about 1.7% stake in Kotak Mahindra Bank in a block trade. The shares are offered at 1792 to 1886.5 each. The price range represents a discount of up to 5% compared to yesterday's close. And remember, this is, Canada Pension held about 4.3% stake. They are now selling 1.7, which means that the overhang of more supply doesn't go away. And therefore, it'll be interesting to see how Kotak does today. One, if there is a lot of demand, does it recover very, very strongly, or it kind of recovers a little bit but doesn't do too much simply because the supply overhang stays? And I'm not saying, therefore, I know that Canada Pension Board will come in and sell the next 1% in the next 1 month. No, not certainly not. I'm not suggesting anything. I have no idea. But all I'm saying is the market might want to believe that some of those oversupply overhangs might stay for a Kotak Bank. That is probably what is holding back, for example, a stock like Delivery, right? I mean, a lot of notes in the last 6 days. I've seen 4 institutional notes. But the problem is that there is a belief that the supply will keep on coming into some of these names. And hence the issue for a Kotak Bank today. But let's wait and watch. Now, you saw that OMC stocks had a bit of an issue yesterday. There might be a bit of a reversal today. Who knows, because of the crude plunge, right? Brent crude dropped nearly 7.8% yesterday to $73 per barrel before recovering to 75.5. Now, there are unconfirmed reports of a temporary nuclear deal between Iran and the US. West Texas Intermediate also fell as much as 4.8% to slip between below $70 per barrel. Now, all of these things, by the way, may change in the context. In fact, between the time that I last saw and now also, there might be some changes that might have happened to the Iran-US nuclear deal commentary as well. So you never know what has happened there, or what will happen there. But I'm just bringing to you what happened in trade yesterday, and as a result of which, it might be interesting to see if indeed crude prices, you know, kind of leave a bit to be desired, and therefore does it impact some of the OMC stocks in the session today? In fact, it's not just the OMC stocks. You might well see paint companies or tire companies also getting impacted, and upstream oil, ONGC and Oil India might get impacted negatively. Now, Oil India in the Morgan Stanley conference has actually sounded reasonably optimistic, if I'm not wrong, or maybe not the conference, but it's a brokerage note. But it seems the fundamentals are seemingly good, but oil price movement might just hold the upstream stocks under a bit of a check. Now, what might not be under a bit of a check is sugar names. Balrampur, Triveni, Renuka, you name any sugar name. I've just cited those three. It could be any name, because US sugar futures yesterday rose about 3.5% to about 25.36. Now, it rose as much as 3.7% as well, the most since April 24. Now, this is happening all on account of a belief that if it's an El Nino year, then it might really impact crop patterns of all kinds, and therefore sugar prices are just moving higher on perceived shortage. Remember, India exports are also shut, and remember, world markets, the sugar supplies are a bit of an issue, and that is leading, I presume, to a bit of a surge in Indian sugar companies as well. Yesterday, so interesting times, I believe. If you just look at the last 7-day chart, you will see the kind of delivery-based buying that we're seeing in some of these sugar names. So do watch out for this pocket. Could be interesting. By the way, before we move to the next stock, I think people should also watch out for tea companies, because the second flush of crops at Darjeeling has gotten impacted due to a pest issue, and that might actually impact some of these stocks as well. In fact, let me try and see, and I bring it to you what this piece was. Yep, there's a pest attack which has taken a toll on tea production in both Assam as well as West Bengal, and that might impact the crop patterns at tea. So watch out for the tea stocks too in the session today. Could be important. Then some other stocks, Aether Industries. It signed a pact with Saudi Aramco Technologies commercialization of polyols technology for commercialization of polyols technology. This manufacturing process of polyols was jointly developed and validated at pre-commercial scale by both Aramco and Aether. Now, this could be a big thing. Of course, we'll ask the management what it means, because it's difficult to kind of quantify what this means just on the basis of this news. But it seems to be interesting because it's with Aramco, Saudi Aramco Technologies. Keep that in mind for technologies commercialization of polyols tech. So it would be interesting to see what it means for Aether. Then HAL, there's a board meet to consider a subdivision of equity shares, which will be held on June 27th. Typically, these things tend to excite investors. It doesn't really change too much, but for the liquidity availability, and that is also an important factor. So maybe the stock reacts. Let's wait and watch. And Capacite Infra, Mukul Agarwal, Vikas Khemani, and Capri Global will invest 96.3 crores in Capacite Infra projects, and that could be interesting for the stock. So do watch out for this one. There is apparently a note from Macquarie on India Insurance. They've downgraded some of these stocks, so do watch out for these stocks as well. And by the way, watch out for the power demand, viewers. That is an interesting one. There is a chart that is coming into from CMIE, of course, and published, I think, by JM Financial, if I'm not wrong. It says that peak power demand in India crossed the all-time high levels yesterday. Now, there's a Morgan Stanley note today which speaks about how gasoline and diesel demand is at 5-year highs. Power demand, 8-year highs. There's something happening out there. There are a lot of there's a lot of skepticism, maybe rightly so. There could be an impact on growth because of what's happening in global growth, but the high frequency indicators seem to be indicating some enhanced economic activity. And I think you've got to pay attention to that as well. I may be completely wrong. I'm not an economist. In fact, it's something that we'll talk to one of the market experts in today's session. And Sushant Bhansali, I believe, of Ambit is going to be joining. So we'll talk to him about this for sure. In addition to a bunch of other conversations that we'll have. There's Dollar Industries joining in as well and trading conversations with Narendra Solanki and Amardev Singh. But Sushant Bhansali's conversation on Talking Point, I think I want to talk at length about what the economic indicators seem to be indicating about activity and what that could mean for economy-facing sectors. I think it's an important part. Lastly, before we wrap up, what stood out for me was this note from BofA. This came on Bloomberg. So from global markets perspective, so BofA expects the strength in tech sector to permeate to other areas of the stock market. According to them, the quantitative tightening indicates valuation mean reversion likely, and strength may broaden to cyclicals and higher beta stocks. Excluding the 50 biggest stocks on the S&P 500 index, equities are trading cheap. They are a full standard deviation below historical average multiple. And BofA believes that the valuations are more correlated with quantitative easing than earnings or flows, and during such period of quantitative easing, mega cap growth stock multiples are more correlated. They are happy, but with quantitative tightening underway, the segment might see multiple compression. So earnings or flows of these companies may not necessarily move, but quantitative tightening or easing may move these stocks according to BofA. And because QT is underway, according to BofA, you might see tech stocks mean revert and valuations broaden to the other names. So they believe that the broader end of the US markets might actually see a bit of a revival. And if that happens, and if indeed NASDAQ were to correct, then maybe you might see some impact on the Indian tech sector too. But some of the other pockets might actually do well. So that is to be kept in mind. Well, that's the long and short of the trade setup today. There is a fire in Zaveri Bazaar which has been doused. Thankfully, hopefully, we pray that there are no serious injuries that have happened and no big loss of property or equipment or goods. One certainly hopes that is the case. But thank you so much for tuning into the trade setup this Friday. And have a great weekend, viewers. I will see you with the trade setup on Monday if you're not tuning in for Talking Point today.